Welcome back to Tax to You, the practical tax channel where we answer all of your tax related questions. Today I'm going to be showing you how to complete the 23-24 self-assessment tax return if you have rental income. To do this, I'm going to cover a walkthrough of how to tailor your return, that's setting it up for your own individual circumstances, a demonstration of the entries you'll need to make in order to declare your rental income, and an explanation of how the tax liability is calculated. Before we get into it today, don't forget to like the video and subscribe for more helpful tax content. Submit your questions in the comments below and we will endeavour to get them answered either in the form of a reply or possibly a dedicated video just like this one. You can also find us at tax2u.co.uk because although our aim is always to educate our clients as much as possible and share this information, we understand that tax can be confusing, stressful and time-consuming, and that's where we can step in and help, saving you time and money. Check out the thousands of Trustpilot reviews from clients who trusted us to do just that. Our services include obtaining CIS tax refunds, completion of self-assessment tax returns, and even closing down self-employments when you've finished trading. You'll find a full list of services offered on our website, along with a price guarantee ensuring that we beat any professional quote by 20%. So let's start with how to tailor the tax return for rental income. So here I am, I'm logged into my government gateway and I'm on section 3 of the self-assessment tax return, which is to tailor your return or set it up for your own personal circumstances. I have already worked through sections 1, the welcome section, and section 2, tell us about you. These will be specific to you. Section 1 just tells you who can use the online portal to submit their tax return, which is 99% of people. And then section 2 is confirming your personal details, your name, if your address has changed, your national insurance number. At the bottom of the Tell Us About You page, you do have 3 questions. One of them is asking you about whether you or your spouse or civil partner are registered blind. The other 2 are about student loan notifications. Again, only you will know the answer to those questions. But once you've worked through them, this is where you're going to end up on section 3, tailor your return. The tailor your return section is made up of 3 pages, and essentially we're just going to work through and tell HMRC the types of income that we did have or didn't have. HMRC won't make you fill out sections of the return that don't apply to you, so it's very useful to kind of weed those out now. You can see here that we're looking at the tax year, the 6th of April 2023 to the 5th of April 2024. The tax year always runs from April to April, and in this case that would be known as the 23-24 tax year. Now, I myself am an employee, so you can see here there's a reminder that HMRC are aware of my employment. My employer would have submitted my information in real time throughout the tax year, so HMRC would be aware of how much I've earned and how much tax I've already paid. Essentially, I would just be confirming it, and I would normally do that by saying yes to being an employee or director or agency worker, the top question here. But because in this example, I just want to declare rental income to show you how that works, I'm going to say no to this question. And then that's all we're going to do. We're just going to work through these 3 pages and tailor the return by answering yes, no to these questions. The second question is then, was your turnover more than £1,000 in total from self-employment? So you're going to find plenty of videos on our channel explaining how to declare self-employment. In this case, they're only interested in total turnover exceeding £1,000. So if you had a small self-employment, maybe earning £500, you don't technically need to declare that income to HMRC, but anything exceeding £1,000, you would have to tick yes here. Were you in a partnership? A partnership is simply 2 or more self-employed individuals working together under something known as a partnership agreement. It wouldn't be enough to just be working with your friend. You would actually have to have a written agreement in place about who takes what from the business, who's entitled to what and who does what. It's all laid out within the partnership agreement. I'll say no to that one. Did you receive income from UK land or property, including income from foreign property over £1,000? So this is the section that's going to apply to rental income. There's more than just rental income that goes in the property section or UK land and property section, but the main sources of income would be Traditional buy-to-lets, your sort of residential properties, individuals who buy a second property and let it out on what would normally be a 6-month short-term tenancy agreement. That's one. You've then got furnished holiday lets, or your short-term letting, and then you've got renting a room within your own home. So those are your 3 most common types. There is additional income that could be declared through this section of the return, so we will go through that in a bit of detail, but those are the 3 that I'm going to focus on, and I'll declare income for each of those types within here. So again, just note that it's only income over £1,000. So if you had a little bit of income, again, there's something called a property allowance, which is £1,000, and technically you wouldn't have to declare it. So I'll say yes, and it's going to populate that section of the return. If you received any foreign income, do you need to complete the foreign section? I'll say no. Just be a little bit careful here. Foreign income would normally be things like employment income if you're working overseas. It could be foreign investments, and that would include foreign property. So some overseas properties would have to be declared under this section here, this second section. And I say some properties because if we move back to the UK land or property section and you click on the link below, the links below will always provide you with additional detail. So if we click on this link, you can see income from letting furnished holiday accommodation in the UK or the European Economic Area. So that's most of Europe in the EEA, but you can find the full list available if you follow the links below. So if I had a property in Spain, which falls within the EEA, and it was considered a furnished holiday let, then that would actually get declared under the UK land or property section. If I had a property in Spain and it wasn't considered a furnished holiday let, well, that would actually get declared, the income from it would get declared in the foreign section below. So just be a little bit careful with where you're declaring your income, in particular where you've got property overseas. If you disposed of any chargeable assets. Now, this is the capital gains section at the bottom here. So this will apply if you are disposing of one of your properties. Not all properties attract capital gains. For example, your main residence is exempt, something called principal private residence relief. But certainly if you're holding an investment property, a second property, and you sell it, you'll likely have to pay capital gains if you've made a profit on it. Before we do go any further, just remember here at Tax to You, we can help you save time and money by allowing us to prepare and submit your return to HMRC for you. You'll find full details of how we can help at taxtoyou.co.uk, and you can also check out the thousands of Trustpilot reviews from clients who trusted us to submit their returns on their behalf. Now let's get back to the video. I'm now on to page 2 of 3 of the Tailor Your Return section. Did I receive any interest? So this is becoming more common now with higher interest rates. Again, there is something called a savings allowance. So the amount you receive depends on which tax bracket you belong to. It might be £500, it might be £1,000. In this case, again, I only want to declare my rental income, but just to be aware of what they're getting at here. Did you receive any dividends from UK companies? So if you have shares in Tesco's or Sainsbury's or Rolls-Royce, you might receive a dividend from those shares, and that would get declared here. If you're invested in foreign companies, so maybe you hold shares in Alphabet or you hold shares in Tesla or Apple or whoever it might be, if they were to pay you a dividend, providing your total dividend from foreign companies is below £1,000, that can also go in this section here, but for the most part it's from UK companies. I'll say no. UK pensions, annuities and state benefits. So even your state pension or your pension, your workplace pension that you pay into, when you actually receive payouts from that on a regular basis, part of it can be tax-free. You can usually receive up to 25% lump sum tax-free, but the regular payouts that you get, that's taxable income, so you would have to declare it under this section here. Did you or your partner, if you have one, get child benefit payments? So anyone with a child anyway, you can claim child benefit. Doesn't matter how much you earn, But if one of you does earn over £60,000, then HMRC actually start to claw that back. So technically, yeah, you could be earning 100,000 or 200,000 a year and still claim child benefit, but they're going to get that money back from you via the tax return. It doesn't matter who's claiming it. It's the higher earner that has to declare it on their tax return and would have to pay the high income child benefit tax charge if they earn over 60,000. Did you receive any other UK income? So this is more like a wrapping up question here. It's going to be less common to be ticking yes to this one. And again, use the drop down below if you want to see exactly what falls into that one. Income tax losses. This is actually linked to the question above. So less common to be ticking yes here, but these income tax losses relate to other UK income sources. Are you liable to pay pension savings tax charges? You can save up to £60,000 in a pension, or pay up to £60,000 into a pension each tax year without any tax consequences. After that, you'll pay a pension savings tax charge. And again, you can read about this below. So that's to prevent very wealthy individuals to using pensions, which are a really tax efficient way of saving, too heavily. Of course, 60,000 is still a pretty significant amount of money, so it still happens. But there is a limit to how much you can pay into your pension each tax year. I'll say no and I'll continue. Final page of tailoring your return. Did I make contributions towards a personal pension or retirement annuity? So if I've paid into a personal pension scheme, in order to get my tax relief in full, I might need to declare that on the tax return. Depends how the private scheme or the personal scheme works, but that's the reason that they're asking here. Same with giving to charity. There can be additional tax relief available for charitable contributions. Normally when you make a donation to charity, they will ask if they can claim gift aid on that donation. So the way that works is they will go and get 20% tax back from HMRC, the tax that you have paid if you're a taxpayer. But if you're a higher rate taxpayer or additional rate taxpayer, you would have paid 40 or 45%. So the charity in that case would still only go and get 20%, but you, to encourage people to give to charities, you may be able to go and claim the additional 20 or 25% as a higher or additional rate taxpayer. So it's worthwhile declaring it on your tax return. Obviously, if you're only a basic rate taxpayer, there's not really any tax benefit there. If you or your spouse or civil partner were born before 1935, do you want to claim married couples allowance? They're just trying to work out if you're entitled to any additional allowances here. It's unlikely to apply to most people, but this one may be more relevant below. Do you want to claim the marriage allowance by transferring 10% of your personal allowance to your spouse or civil partner? This normally applies where you've got two people in a relationship, so spouse or civil partner, who one of them is a lower earner or earning under the personal allowance and one is a basic rate taxpayer. The lower earner can transfer 10% of their personal allowance to the higher earner, to the taxpayer, and they will benefit from, more tax-free income. So worth doing if you find yourself in that situation. I'll say no to that one. Another wrapping up question here. Do you want to claim other tax reliefs and deductions? They're giving you some examples. Less common, this one. And have you had any 23-24 income tax refunded or offset by us or Job Centre Plus? Just to clear something up, which gets asked a lot on the channel, universal credit doesn't fall under this question. Universal credit isn't taxable income, so it doesn't need declaring on a tax return. Did you have a tax advisor? If we are completing your tax return on your behalf at Tax to You, then we would be ticking yes here and providing our details. If you're completing your own tax return, obviously you'll be saying no. Have you used one or more tax avoidance schemes? The thing with tax avoidance schemes is HMRC are aware of most of them. Most of them are allocated a reference number, and when you use it, you have to tell HMRC, here's my reference number, this is the scheme that I used. Eventually they close down the loopholes and eventually they end up taking you to court and trying to recover that lost tax anyway. Are you acting in capacity on behalf of someone else? If you are completing someone's tax return for them, you need to inform HMRC of that. If not, you can say no and then continue. Now, if this does seem like too much hassle, or maybe you need some assistance with your tax return, don't forget to check us out at tax2u.co.uk, where our accountants can take the stress out of preparing and submitting your return to HMRC, all while saving you time and money. Next up, let's look at completing the property income section. So now that I'm happy that I've tailored my return, and I can check that I've tailored it correctly by scrolling down, I've already entered the Tell Us About You section, I've tailored my return, and then below that, I've got my UK property income and other property sections where I'll declare my 3 types of property income. The sections below that will apply to everyone. So underpaid tax, overpaid tax. These will apply to absolutely everyone. You can't get rid of them. They just stick to everyone's tax return. I'll scroll up to UK property and I'm going to click on the first section that is not entered, that is marked in grey here, to enter property details. And here we are on the first page. So you have said that you received income from property during the tax year. Please complete the following questions. Do you want to claim rent-a-room relief? This is our first question here. So I'm going to use this as part of my example. So rent-a-room normally applies when you're renting a furnished room within your own home. Has to be furnished and cannot be self-contained. You can look at the full guidance below, but those are the main criteria. So if you had an annex with its own entrance and kitchen and everything, you wouldn't normally qualify for rent-a-room relief. If you do qualify, you get a pretty generous allowance of up to £7,500 per tax year. If you let that room jointly, then obviously it's going to be half of that. So in this case, up to £7,500 is tax-free, which is very, very generous. I'm going to say yes to wanting to claim rent-a-room relief, and then you're presented with a second question. If yes, did you receive rents of £7,500 or less? So if it's £7,500 or less, you would say yes here, and then HMRC won't ask you another question about it, purely because it's covered by the allowance or the exemption. And they don't need any further details. I'm going to say no, so we'll assume that I've received £10,000 via renting a room in my own home, and I'm going to claim the £7,500 allowance. How many properties did you rent out? So I'm going to include my rent-a-room relief, so that's my own property that I live in, but I am renting part of it. I'm going to include a furnished holiday let, and I'm going to include a more traditional investment property, so one that's let, a residential property that's let on a 6-month tenancy agreement. So that'd be 3 properties in total. Do you have income from property let jointly? I'll say no. Just be aware of this. So if you own a property with your spouse or civil partner, irrelevant of how you own it, maybe one of you owns 10%, one of you owns 90%. That's the money that you put into it, and that's the legal agreement if you looked at the deeds of the property. It is always considered that income is split jointly between the 2 of you. You can make an election to split it back in line with the legal ownership or a different split, but it would be assumed that it is 50-50 if you haven't made that election. Did all property income cease in the tax year? So again, if you tell HMRC it's ceased, they're not going to expect you to complete a tax return or complete that section of the tax return next year. I'll say no because I'm expecting it to continue. Did you receive income from UK furnished holiday lets? I'm going to say yes. Now, there are strict criteria to being classed as a UK furnished holiday let. You can look at the basic criteria below, but there is a more detailed version of this if you go and click on the help sheet to get the full guidance. But essentially you need to make it available for holiday letting on a commercial basis, so you can't be letting to your friends and family at discounted rates or for free. You need to be doing it to make a profit for 210 days or more during the tax year, and it needs to actually let for 105 days during the tax year. Again, more detailed guidance available via the help sheet, but I'm going to say yes, I have one of these properties and I qualify as a UK furnished holiday let. There are certain benefits to qualifying as a holiday let. The main one that people would think of is mortgage interest or financing cost. It is an allowable expense for UK furnished holiday lets, but for my more traditional rental property, it is not an allowable expense, and we'll come on to that in a moment. Did you receive income from EEA furnished holiday lettings? So same again, but for countries based in the EEA, I'll say no to that one, and I'll save and continue. Now, if this does seem like too much hassle, or maybe you need some assistance with your tax return, don't forget to check us out at tax2u.co.uk, where our accountants can take the stress out of preparing and submitting your return to HMRC, all while saving you time and money. Details of my UK furnished holiday let. So let's start with this property, furnished holiday let. I had income from my furnished holiday let of £20,000, so I'm going to enter that in the top box here. Property income allowance. Now, the property income allowance can be used instead of claiming allowable expenses. So if I had no expenses to claim, the allowance is up to £1,000. So I could enter £1,000 in here. And even though I haven't incurred any expenses, I'm then going to get taxed on a £19,000 profit. Now, you can't use that allowance in conjunction with other expenses. So typically where you have more than £1,000 of expenses, you're not going to claim it. You're going to leave that blank. And you also can't use that allowance to create a loss. So if I had £500 of income from my furnished holiday let, I can't enter £1,000 here because that's going to create a loss. What I could do though is enter 500 to bring it down to no profit or down to nil. In this case, I'm going to leave it as 20,000 income. I'm going to leave the property income allowance blank. Did I use traditional accounting rather than the cash basis to calculate your income and expenses? So traditional accounting versus cash accounting. So if you think of an expense, if I had my furnished holiday let, if I had the carpets cleaned and the supplier that did it said to me, I've cleaned the carpets today, you've got 30 days to pay your invoice. Under cash accounting, if I paid that invoice in 30 days' time, then I would account for it in 30 days' time. Under traditional accounting, because I've had the carpet cleaned now, I would account for it now. That's how it works, and the same applies to income. It's when you received the income under the cash basis. It's when you generated the income under traditional accounting. So I'll say no because I'm happy that I've used the cash basis. It's a slightly easier way of doing things. And then I'm just going to enter in expenses. I've got some pre-populated here. So rent paid, I'm going to say I've got £1,000 of rent that I've had to pay, or insurance or repairs. Don't overthink these categories here. Again, you can use the guidance below, but providing the expense type fits somewhat within the category, then you can enter it in that box. Loan interest and other financial costs. Now I've got £5,000 in here. And as I mentioned, loan interest is an allowable expense for UK furnished holiday lets. The benefit of this is that if I'm a higher rate taxpayer, let's say I earn £80,000–90,000 overall and I pay 40% tax at the highest rate, then by entering £5,000 here, it's going to reduce my taxable income by £5,000. And my tax saving essentially is at the highest rate of tax that I'm paying. So I would save 40% tax on this £5,000. So I'd have a saving of £2,000 by entering that figure here. Remember that because the process will be slightly different when we come on to the residential letting in a few moments. I've got a couple of additional expenses below for legal, management and other professional fees. And then below that, we've got a private use adjustment. So if I've been staying in this property, 1/10 of the year, then I would need to make an adjustment because 1/10 of my expenses won't be allowable. They would have related to when I was staying there. The rest of the questions, balancing charges, electric charge points, etc., these relate to capital allowances. So if you're making investments in assets for your rental business, then they would fall under this section here. In this example, I'm not touching capital allowances, so I'm going to leave these blank. And you can see at the bottom of the page, I've got furnished holiday let adjusted profit for the year of £13,000. The box below that, losses brought forward and used against this year's profits. So if I leave this blank at the moment, there's no adjustment to the profit. If I have made a loss in a previous year in my furnished holiday let business, I can roll that loss forward indefinitely for as long as I like, and I can offset it against future profits. So in this case, if I had £5,000 of loss, then I could enter it here and it will reduce my taxable profits down to £8,000. If I had 20,000, then what I would do, I wouldn't actually enter the full 20,000 here because you cannot, again, create a loss. But I could enter 13,000. I could continue on to the next page. You can see my profit has been reduced to 0. And then the next box is to carry forward. So I would carry forward the remaining 7,000. Now, in this case, I'm not actually going to do that. I'm going to head back to the previous page. Let's assume that I had maybe £3,000 of losses brought forward, and I'm going to utilize those. That's going to bring my profit for this period down to £10,000, and I'm happy with that. I'm going to save and continue. I've used all of my losses. I haven't got any losses to carry forward, so I'm going to leave that one blank. Do you want to make a period of grace election? So a period of grace election applies where you've met the criteria to be classed as a UK furnished holiday let in previous tax years, but maybe in this tax year, for whatever reason, could have been COVID, it could have been the property was being renovated, you haven't met the criteria. You can make a period of grace election and you would still get the benefits of being classified as a UK furnished holiday let. I'm going to say no. Again, full guidance below here. And that's it for the furnished holiday let. Now we're on to other property income. So the first thing to note here, this is all of my other property income. So I've declared one property. I've got 2 more properties that I need to declare, and those will be my renter room relief, my own property that I'm renting a room in, and my more traditional buy-to-let property. So total rents and other income from property, I would have to combine those 2 figures. So I've already said that I had more than 7,500 from renting a room in my own home. So let's say I had 10,000 from renting a room in my own home, and I had 15,000 from renting an additional property. I would combine those 2 figures and I'd have 25,000 of income. The property allowance would apply in the exact same way that I mentioned before. The only thing to note is that you would get 1 property allowance per individual rather than per property. And again, if I have more than 1,000 of expenses, it's not going to apply anyway. Did I use traditional accounting? No, I'm happy again that I've used the cash basis. Any UK tax taken off total rents and other income from property. This applies to landlords who live outside the UK. So where that's the case, you live outside the UK and you're receiving a rent from a UK property, your tenant, or more often the letting agent who manages the property for you, will actually have to deduct tax and pay you a net rent. They then pay that tax straight across to HMRC. I'll leave that blank, but just be aware that's what they're asking for. And then we've got a couple of additional income sources that could apply, less common, but if you own the freehold on a property, you might grant a lease to someone and generate a premium from doing that. You would enter your income here. And if you're taking on a lease on a property, they might incentivize you to do that. They might give you an upfront payment to take on a derelict property, for example. You would enter that income in this box. So those are additional types of property income that might be declared under this section. Save and continue. And again, I'm back to entering expenses for my other property income. At the moment, I've got 25,000 of income under this section. I am going to enter a few expenses in here. So we'll go with 2,500 of rent rates, insurance and ground rents. We'll go with some property maintenance costs to bring it down to 20,000. Then we're asked about non-residential property finance costs. Just note how this is only non-residential. So you're looking at commercial properties, but in my case, it is a residential property that I let. So the financing costs are not allowable. Again, we're going to come on to that very shortly. I'll leave that one blank. Legal, management and other professional fees, I'll leave blank. These are just types of expenses still, and then an adjustment for cost of services provided. So if you're doing gardening or maintaining a property, you may be making an adjustment for the costs associated with that. Any other allowable expenses at the bottom, I'm going to leave those blank because I want to keep it with a round figure for our example. So we got 5,000 of expenses to come off our 25,000 of income, and I'm going to save and continue. Now we're looking at adjustments for this property income. So same again, private use adjustment. If I've been using this property for 6 months of the year, I need to disallow half of those expenses. I'll leave that one blank. Balancing charges, annual investment allowance, structures and buildings allowance, electric charge points, free port. These all relate to capital allowances again. So purchasing assets or more expensive equipment, machinery for use within your rental business. They're not going to apply to this example, so I'm leaving all of these blank. The one that I am, or the two that I am going to come on to, at the bottom, we've got the cost of replacing domestic items. So if you do have to replace domestic items within your residential property, then you can claim for the expense of that. You can't claim for the original purchase, but for replacing like for like, you can claim here. And then finally, one that will definitely apply, rent a room. So in this example, I'm declaring 10,000 of income from rent a room. That's all wrapped up within my 25,000 figure. I want to claim the £7,500 allowance from that. So I'm going to enter that in the box here so that I'll only get taxed on the 2,500 that actually exceeded the allowance, and I'll save and continue. I'm then left with an adjusted profit for the year of £12,500, which on the face of it makes sense to me. I had 25,000 of income, less my 5,000 of expenses, less my 7,500 exempt amount from rent a room. You would expect it to be 12,500. Same again, you might have losses brought forward to utilize, and you would do that by entering them in this box here. And then a little bit rarer, but you may also be able to offset a loss against other income or your total income. But if HMRC are telling you it's unusual, that means it's actually very rare and very unusual. But in certain circumstances, you may be able to do that here. I'm not going to use any losses against this type of income. We've already covered that previously, so I'll leave these boxes blank, but we will talk about this. Residential property finance costs. So I already mentioned that residential financing costs are not allowable. So you might be wondering, well, why are they asking you about it here? The way it works is previously under the previous section. So when I entered details of my financing cost for my furnished holiday let, that was an allowable expense. I entered £5,000 and I explained that I got tax relief at the highest rate of tax that I paid, which in that case was 40%. So on that £5,000, I got £2,000 of tax relief. For residential property finance costs, you do still enter the information, but you get what's known as a tax reducer. And you get that at 20%. Everybody gets it at 20%. So if I enter £5,000 in here, even if I'm paying 40 or 45% tax, I'm only going to get 20% tax relief. So they'll reduce my tax bill by £1,000 in that case. If I enter 5,000 of cost in this box here, I'll get a £1,000 tax reducer. Now, for higher and additional rate taxpayers, that's not great because they're missing out on the additional tax relief. If you're a basic rate taxpayer, it's the same. Okay, so it wouldn't actually impact you. You are also restricted. So if I had a £2,500 profit and I had £5,000 of residential property finance costs, then I actually would only be able to enter 2,500 because I can't create a loss from that, and then I would have to enter the remainder to carry forward to the next year. In that year, I might be able to utilize it. In this case, I'm going to put in the 5,000, so I should get that £1,000 tax reducer by the time we get through to the calculation page. So I'm happy with that, and I'm going to save and continue. Any other information for the property income section? If there is anything that you think somebody reviewing the return would find useful or may query, you can explain that away here in this. It's known as white space. If it's not going to be useful, if it's a straightforward setup, then there's not any need to provide any additional information. We're then given a summary of our property income. So in my case, I have got my furnished holiday let, and then I have got my other UK property income, which includes my renter room relief and includes my more typical buy-to-let property. And you can see I've got a 10,000 profit on one and 12,500 profit on the other. I'll save and continue. And then the series of questions that follow apply to everyone. So these aren't specific to me because I've declared rental income. Everybody who completes a tax return will be presented with these questions. So we'll just fly through these. An amount of underpaid tax from earlier years included in your tax code. HMRC are telling me that there isn't any. Do I think that's correct? I'll say yes. Our records show that, again, an amount of underpaid tax from the 23-24 included in my PAYE code. HMRC are saying that's zero. Again, I'm happy. I would have received some kind of notice if it was different. I'll save and continue. And then enter the amount of outstanding debt included in your tax code. If it's zero, you have to enter a figure, so I will enter zero. Overpaid tax. If you're going to be due a repayment, then you can provide your bank details or nominate somebody else to receive that repayment. I'm going to say it's not applicable because I won't be due a repayment in this case. And again, you could see that can take up to 12 weeks if you are due a repayment. The benefit of having submitted a return by the 30th of December 2024 in this case is that you get an additional option for collecting your tax liability. Providing your tax liability is below £3,000, then you can arrange to have it collected through a future year's tax code. So I'm going to say no, I don't want that to happen. I'm happy just to pay my liability. And then a similar question below, you can have it collected via the current year's tax code. I'll say no again. Adjustments. So if you want to make adjustments to the amount of tax payable for whatever reason, you would use these boxes here. Very rare that you would do this. I'll save and continue. Does my return contain any provisional figures? So if you didn't have access to certain figures for certain reasons, you can submit provisional figures. HMRC will normally be expecting you to come back and correct those figures. So in most cases, you'd want to be saying no here, but a fail-safe, if the deadline was tomorrow, you might use that. It's much more common for self-employed income though, and wouldn't usually apply. You wouldn't normally be doing this for rental income, as you should have all that information available to you. A bit more white space, just general information now. We're not talking specifically about my rental income because we've already had the white space for that. This is purely just for general information that might help someone reviewing the return. I can add attachments if I want to as well. And then we're just checking that everything has been entered. Every section that was generated, I've entered information for. I'll click next. And I should be able to view my calculation here. Remember, what we've demonstrated here is how to enter income and expenditure figures for rental income. To get to this point, you would need to work through all of your receipts and your bank statements and decide which expenses are allowable and which aren't. Of course, that in itself can be difficult. So if you want one of our agents to help determine which expenses you should include in your rental profit calculation and which you shouldn't, you can book via the link below, then simply scan and send photos of your receipts and we will take care of the rest. We'll also be able to advise if there are any additional expenses or allowances you should be claiming to further reduce your tax bill. Again, follow the links below for details. Now, let's look in more detail at the tax calculation. So back to our tax calculation here for the 23-24 tax year based on our rental income that we've just entered details of. This is more of a summary page. So you can see here the total amount due for 23-24 is £986, and they're expecting us to pay that by the 31st of January 2025, 986 in total. I'm not going to have to make any payments on account. Usually if you have to make payments on account, they'll show below, and most of the time that only applies when your tax liability is over £1,000. If you want a more detailed breakdown of that figure and how the tax was calculated, if you scroll to the bottom and you click on view and print your full calculation, we're then presented with the breakdown. So in this case, my total income from property for UK land and property was £25,500. That includes my furnished holiday let, that includes my renter room, and that includes my more traditional buy-to-let investment property. I've then got £3,000 of income tax relief, which was the figure I entered for losses brought forward. So I entered that against my UK furnished holiday let income. I've got my personal allowance, and that means a total of 15,570 is being deducted off the 25,000. So I'll only get taxed on 9,930. If I scroll down, you'll then see tax being applied to that figure. Because it's a fairly low figure, the full amount is being taxed at the basic rate of tax, which is 20%, which gives me £1,986 liability. I've got my tax reducer, which we mentioned. So this is the 5,000 of residential financing cost. So I'm getting 20%. Everybody gets 20% relief on that where it applies and where they qualify. So that's reducing my liability by £1,000 as we expected. Giving me a total liability to pay of 986. Now, assuming that I'm happy with that figure and I don't need to go back and make any amendments, all I'm going to do is save down a copy of my return. I'm going to continue on, scroll to the bottom of the page, I'm going to continue on, and I'm going to re-enter my login details to actually submit my tax return to HMRC. Now, after viewing this video, you should be able to tailor your own tax return so it is set up for your own personal circumstances. Complete the property pages of the return, and you'll understand how the tax is being calculated. Don't forget, if you're having any trouble at Tax to You, we provide an easy to use self-assessment service and would be happy to help whatever your situation. Just follow the link below. That is all for today. Don't forget, check us out at tax2u.co.uk and subscribe to the channel for more helpful tax content. Thanks for watching. See you next time.